Welcome back to the Bitcoin Treasuries podcast. I'm Tim Kotzman. I'm here with Matt McDonagh. Matt, thanks for joining us.
Cheers.
And can you just run us through your full name real quick?
Matt McDonagh. Matt Mark McDonagh. And I may or may not have had a monogram backpack, LL Bean style, of course, from when I was a kid. And it was about this color too, ironically enough. And it had MMM on the back of it. So I had a lot of comments and things that came my way, which was...
Could have been worse.
Oh, yeah. Yeah,
like a lot
I had
worse.
a friend whose letters were KKK, and she had a much different backpack than I did.
That's brutal.
Yeah.
That's brutal. Can you tell us about your background and
Sure.
your journey to...
It's been a long, strange trip.
Yeah.
Yeah.
I'd love to hear it.
Cool. So I started out in investment banking. Investment banking is cool. You know, you're chopping up value. You're really a capillary moving risk and energy from one company to another, maybe combining businesses, but you're not really creating something. If anything, you're just looking for inefficiencies to rip out, which means people and things like of that nature. So I didn't love the work, but I loved finance. And so I thought, why don't I use the growing power of technology and machine learning and get away from ripping companies apart, but look for companies that are being undervalued, being ripped off by the market. And so I came up with an idea to machine read financial statements using Python in like 2010, 2011, and then use natural language processing, NLP, to basically digest what the words meant. And this is like an early version of LLMs, although literally very different architectures, but the same end result. Like, was this footnote from the CFO, did it contain a weasel word? Yes or no? And then
What's a weasel word?
You know, maybe, kind of, we believe, you know, just words that make you feel like things aren't necessarily, the numbers that he's saying and the words that he's saying might be diverging.
Okay.
So anyway, so this would go through and create a map, a Boolean map of all the weasel words and other kind of interesting things that were being said in quarterly filings and annual filings and literally in transcriptions. And then it would flag securities that we should look at. And so that was the basic strategy, to build a fish finder to look for opportunities that were in the financial statements that might not be caught by humans. So that's how I first started seeing the power of technology and realizing, man, this is going to start changing a lot of industries. And that was a while ago.
And can you take us from there
Yes.
to Bitcoin, or had you already discovered Bitcoin at this point?
Yeah. So while I was figuring out the Python thing, I was in the Princeton Club. By the way, not repping Princeton. I went to Fordham, but they're sister schools, I guess, and they have like a relationship where they can share some facilities. And so the Princeton Club, though, it's no longer with us, sadly. I think it's been closed. But every single person there was 150 years old. And so I looked across the reading room and there was like a kid, like there was somebody under 30 and he was on a laptop. And sure enough, there was code on his screen. And I was self-teaching Python at the time. And so I thought, I'll go over there and say hi, introduce myself. Well, it turns out he wasn't like coding. He was looking at code and he was looking at the Python code. Looking at the Bitcoin code at 2012-ish. And I, asked him, what are you looking at? And he explained it. And I'd heard Bitcoin from my banking days. So I was aware of it tangentially, but it kind of screamed like internet money. And I was worried about what I called spreadsheet industries back then, which are basically industries where the competitive balance can change based on what's happening on a spreadsheet. Like, I like battles that play out on the ground with logistics that I can look at, like seeing companies building up forces and looking at it like an army almost. Spreadsheet, the digital world is different. Like, the armies are hidden. The algorithms are figuring out who's going to win or who's going to lose. So I used to be scared of technology, of those kinds of technology companies. I liked technology-enabled logistics companies like waste to energy or logistics, things like that. So those are the kind of, Anyway, long story short, I launched a hedge fund based on machine reading financial statements. The fund failed. We didn't fail to generate returns, more like failed to raise enough capital. We got like 38 million under management, and you need like 100 or 150 million under management as a long short equity fund to succeed these days. So we returned capital to the investors, and a couple of the more enterprising ones, although at the time I was a 25-year-old hedge fund manager, so let's be honest, they were all enterprising to have given me money. But a couple of them said, hey, keep an eye on any deals that come your way. And if you see anything interesting, tap us. And so I tapped them on 3 deals, and all 3 went to zero. Pretty quickly too, like very quickly. Then the 4th one was an identity verification company that we sold to Facebook. This was in 2017, and Mark Zuckerberg was under a lot of pressure because there was data privacy concern issues, Cambridge Analytica, et cetera, et cetera. And so he was really going on a buying binge, honestly, to try to prove to Congress that he took data security and privacy seriously. So our company was one of, I think, 6 or 7 he acquired over the course of that winter. So anyway, after we had the win, then I was looking for a battery to store some of those winnings in, and meaning like, do I put it back into more companies? That's what most VCs do. Or do I look for something that might be growing even faster? And I thought back to my friend in the Princeton Club, and I bought a small amount of Bitcoin. I mean, I say a small amount of Bitcoin, but now it would be a large amount of Bitcoin. But and the value was going up, and I saw the thesis playing out, and so I bought a pretty large amount of Bitcoin at that time with the proceeds from the sale of that identity verification company. And then I turned into a family office and basically started focusing just primarily on finding these interesting companies, looking for where technology was adding value, where AI or machine learning were adding value, and then positioning myself on the cap table. But then also not just being money, being useful, taking my data engineering background and maybe helping them find problems or inefficiencies in their revenue engine, how they make money, or in their back in their product somewhere. So try to add value. And then eventually I realized that the best piece of value that I could add would be to have them have Bitcoin on their balance sheet, like to actually let it be a little nuclear reactor inside of their companies. And at this time, most of my wealth was actually in Bitcoin. And so when companies would come to me and say, "Hey, I know you're an angel investor. Can you invest in our company?" I would say, "Yeah, but I'm going to give it to you in Bitcoin." And then, of course, what would happen?
They would swap it to USD.
Yeah, immediately.
Like immediately.
Yes. So I wasn't really doing much to like spread the word about Bitcoin. I wasn't doing much to really help the price. I mean, maybe they heard about it because of me, but then immediately they were trying to cash. So the next time I had someone say, "Yeah, I'd like to take an investment," I said, "Okay, I'm going to give it to you in Bitcoin, but you need to hold it for 90 days and not liquidate it. I just want you to watch it appreciate, watch how it's performing versus cash, and like see what happens." Sure enough, the guy comes to me on the 91st day and says, "Yeah, I still want to spend it. Sorry." And I say, "Okay, this experiment's failing. I'll tell you what. Why don't I give you a 0% loan, relatively small amount of money, give you some working capital, and this way I don't put any pressure on the Bitcoin." And so this time, he was able to take down the working capital, use it, deploy it. He's smart, so it worked okay. But more importantly, I bought myself a year for Bitcoin to go from 16,000 to 30,000, and then suddenly there was a high degree of certainty that he wanted to hold the Bitcoin. And then now it's becoming not just a value add where I bring technical skills to the table, but I also try to help them understand the value of storing the energy from their economic activity and the hardest asset that there is.
So basically, you said, here's a pile of cash for working capital.
Mm-hmm.
Use that and leave the Bitcoin alone.
Right.
This 0% loan, line of credit, whatever you want to call it, of working capital is what you use for the first 6, 12, 18 months.
Yes.
And leave the Bitcoin alone.
Please.
And by the time they got down
to the end of the rainbow,
down to zero on the USD side, the Bitcoin had at least appreciated.
To the point where they were realizing, I don't want to sell this thing. I'm going to hold on to this thing. And do you have any more of your Bitcoin friends that you can introduce to the company? So it's an ecosystem. And what I love about it is that the value of the dollars don't move up and down the same, sadly. If you're closer to the money printer, you have more access to dollars. And I think your dollars actually have more value because you're also closer to the information printer, which means you can deploy them more efficiently. Bitcoin democratizes this in a beautiful way. And when Bitcoin is Satoshis are monetizing, we're all monetizing. So all of our Satoshis are going up at the same rate at the same time. Yesterday's big pump, like we all felt that, regardless if you've got one Bitcoin or 100, the value of your Satoshi went up by the same percentage basis. And that can't be said for the dollar, sadly.
What are you doing these days as far as, are you continuing that sort of strategy with here's some USD capital, here's some Bitcoin Treasury, or?
Yes, I'm still direct investing, still looking for companies that are in the early stage, that are seed to Series B, that are, basically I look for a decent competitive edge, whether it's experience in the field times technology, or maybe a unique advantage in commercialization, like you have some outlet or distribution outlet, you've got a large following, or you've got a lot of patents that are going to make you very much a thought leader in this space, things like that. So that's still an interest to me. But I think more importantly is, and I'm not just pumping my bags because I don't believe that it's actually even possible for me to create enough demand for Bitcoin to actually meaningfully change the price action of Bitcoin. I think all the money that's been printed and all the fiat damage that's been done is what's going to increase the price action of Bitcoin, not, spreading the word. But that said, we do have to spread the word. And so now I'm focusing more on explaining to people what's happening to the value of the dollar. I'm explaining how artificial inflation is and truly an engineered phenomena. And and then what it means to just store your wealth in cash and what it really means for your ultimate purchasing power. So I'm just trying to educate the people around me about the value of the dollar and the value of the Bitcoin and the differences between those.
Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts. Are you looking for comprehensive analytics on corporate Bitcoin adoption? Strategy Tracker delivers real-time insights into how companies are executing their Bitcoin strategies completely free. Monitor NAV premiums, cost basis performance, and track how corporate Bitcoin treasuries perform against the market. Upgrade to premium for just $3.99 a month and unlock exclusive benefits like detailed market rankings, real-time trading volume analysis, and advanced performance metrics for corporations embracing Bitcoin. Apply code KOTZ at checkout for 100% off your first month of premium. Strategy Tracker is your essential tool for measuring the effectiveness of corporate Bitcoin strategies. Visit strategytracker.com and gain the analytical edge in understanding the Bitcoin Treasury phenomenon. Join us May 27th through the 29th for Bitcoin 2025 in Las Vegas. Use code KOTZ for 10% off tickets. How do you think from an investing standpoint about Bitcoin as the hurdle rate? Right, Matt Cole and Ben Workman and Jeff Walton and I have a pod called the Hurdle Rate, and the whole idea of I'm also an advisor on to early riders, which is what we think. We haven't seen any others, like a Bitcoin denominated venture fund where it's like we only put dollars to work. And of course, you still have to put dollars to work. But if we think it's going to be above the hurdle rate of Bitcoin, how do you think about that?
Well, to understand that, you'd have to understand hurdle rates, and you have to understand essentially just what's happening underneath our capital pyramid. Like there's so much additional wealth being created. And it's, first of all, there's an incentive to not be honest about the inflation rate, meaning we've got debt denominated in and moving based on the value of interest rates. Obviously, paybacks are based on that. And if they, for instance, admit that inflation is really 6, 7, 8%, if you look at the everyday price index, that's what people are really experiencing. They're not experiencing 3% or 4%, like the numbers that we see in our prints. It's in the real economy is much worse than that. And also, remember the whole money printer situation, and when you're closest to it, you get more benefit from it when you're furthest out. I've noticed the same whip in inflation. Like when you're in fine dining, Lartucci didn't go from a $51 ribeye to a $75 ribeye. Like they went from a 51 to 58, but the chicken shop went from $7 to $12. I mean, this is the not only is inflation hitting us all, but it's disproportionately impacting people who have more surface area with consumer goods and lower price point, lower, long story short, the hurdle rate is bigger than they're telling you. And that's basically a problem because one, they're creating more money than they're saying. And then two, there's more exposure from financial engineering and stealth wealth and shadow banking and things of that nature. So yeah, to your point, what is the hurdle? What even is the hurdle rate? And then the second point, if you're not creating more wealth than the Bitcoin hurdle rate, are you actually going backwards on an absolute basis? On a fiat basis, you probably aren't, but on a Bitcoin basis, you absolutely are. And if you believe in the Bitcoin standard, that at some point in the future, we'll all be operating on the Bitcoin basis. So
shout out to Lartuzi. I just went there for the first time maybe a month ago. It was like one of the best meals I've had in a while.
Were you upstairs
in
or
New York? I did not. We were downstairs.
Okay, cool.
And I was like, "Ooh, they have an upstairs. It's bigger than it looks from the front. Very kind of narrow.
Yeah,
in the front there.
And they've got Bartusi, another establishment that's like a cousin of theirs on the corner there. It's just all on Hudson. Yeah. A little younger, a little more fun. It's good.
Yeah, definitely good vibes. Can you share your view on social media and AI and LLMs or whatever the other words that I'm supposed to be using are in relation to all of the content and any way that you want to take it, but like the ownership of the content and what this is going to look like just maybe in a few quarters or a few years?
Yeah, I think the ultimate, the crux of your question, I think, is centralization versus decentralization, and where is value going to be accruing? It's a truth that under Web 2.0, the old internet, and the one, frankly, we're still mostly operating under, the value accrued to the center of the network, the people who had the data farms, the people who had, basically the companies, the big tech companies. Now we have places like X and other communities where individual people are able to establish a digital beachhead, start to build an audience, engage with that audience, figure out what they like talking about, figure out what their passion points are, and start to truly build a distribution engine. And so I think that where we once had to go to certain publishers to get our voice out there, now we have the ability to create value and build audiences online thanks to technology. And I think that AI is pushing us further away from megacorps that have 30,000 people in there because frankly, we don't need all of that additional mass. We're able to have so much more leverage with LLMs and data engineering in general that we're more efficient. So we're able to do the work of 30,000 people with 300. And that doesn't mean that the other 27,000 people are out of a job, or 29,700 are out of a job. What it means is they have the opportunity to go form their own 300-person pods. And every time we have these technological breakthroughs, we do have dislocations in the market, but the dislocations are to the upside. Like if you're a buggy whip manufacturer, and I'm describing a car to you, you're like looking for new work because you're thinking, dang, this thing's going to take away the demand for horses. Like,
you're viewing it as a net negative.
Yes, you're like, this is not good for me, right? But then if you see your first car and you realize, oh man, look at all this surface area for leather work. And then you start realizing, man, I could be inside a factory with it, that's climate controlled versus like in some barn somewhere, tanning hides. This is better work for higher pay. So, I think every time we go through technological loops like this, we always end up to the better, to the upside. And yeah, you can't quite tell what the new jobs are going to be because that's the nature of a curve. You can't see around them. But I've seen humanity go through enough curves to know that we get out on the other side pretty good.
Microstrategy, now strategy.
Nothing micro about them. Good on them.
Strategy, it's cleaner.
Yes.
Just strategy. Drop the micro.
Yes.
All that stuff. What's your view on Bitcoin Treasury companies and the interplay between retail, corporates, institutions, nation states? Reflecting on the fireside chat we had with Fong and Saylor, I guess because the numbers keep getting bigger, that 30 to 60% a year, kind of like that, the maths. But yeah, what are your thoughts on all of this?
Well, one, the market is clearly telling us that it likes these devices. That you look at the price action. There's always a pop on the announcement, and then CEP and these other ones. They're staying elevated after the pop too. So it's not just like, oh, the market heard the words a lot and just monkey here, monkey buy, but now tomorrow there's a new flavor of the month and then they forget about it. There's persistent bid underneath. Where's that coming from? I think it's because the Wall Street world is understanding that they essentially, and this is a little cliche, but they didn't want to let the 401ks become 201ks in 2008. And so they just printed a lot of money. And they can't unprint that money. And this is, of course, as you know, created these incredible monetary premiums that have pocketed in real estate and gold and art and equities, of course. And so, the question is, how do we get these pockets out of these markets in a way that doesn't have real bad consequences for participants and everyone around? The easy answer is to have something that actually absorbs that monetary premium and does something useful with it, right? Bitcoin is a very useful tool because it's a very efficient wealth battery. It's a much better place to store your wealth than exposing it to analog friction and entropy and all the sorts of things that happen when you materialize it into the outside world. So what's Bitcoin's use case? Well, it's essentially a virtualization of our very real economy that lets the growth grow without the weight of atoms. It moves at the rate of electrons much faster, but we could still stay tethered to the real economy. I also love it because Bitcoin's going to get us back to honoring, and I don't even know if I answered your question. We'll talk about MSTR in a second, but I'm just why not? Let's have some fun.
Let's rip it.
Yeah, let's go. Like, value means something again. When they were just putting a constant bid under the entire economy by printing money and pushing the value of goods up, and then making renters have to transfer more of their wealth to asset owners in order to use those assets. And I don't just mean buildings, I mean businesses, I mean like everything, money even, right? So they're just printing. Anyway, long story short, economic power is being drained from savers and from hardworking people. I mean, you inherited perhaps a little bit of money from your parents perhaps inherited a little bit of money from their parents. There is not just a chain of DNA, but there's a chain of hard work, and you've stored that work as wealth. And then now they've made the value of that wealth worth less. They've created so much wealth. So back in 2008, they printed all that money, and now all that money's out in the wild. And now there's companies like MSTR that have figured out that they can create APIs to sit between the TradFi world and the Bitcoin world and allow that monetary premium to get channeled and pulled through, into Bitcoin. And obviously, Saylor was what I like about Saylor's story is he was willing to change his mind about it. Like, he famously said, send money over the phone, that's not going to work. Like, you get one number wrong and you're sent money to the wrong person. Now he sees that there are obviously tools that you could use to make money, sending money much more sound. But also, I think he's thinking about it like a wealth battery, like I do. And he understands the dynamics and the physics of the wealth battery. And that virtual world is just so much better than the analog world. I mean, as a private company investor, guess what I have? I have a lot of people call me every day and ask me for more money. Existing investors, like existing companies I've invested in, they all know each other. They're all on boards of other companies. So it even leads to, some people call it deal flow, but I just think it's just people asking me for money. Well, I know some real estate investors who are quite successful, and they have the same beef, so guy makes some money in private equity, and then he goes in and buys 300 apartments across 5 or 6 buildings, and on theory he's getting whatever it is, 30 rent checks a day. Sounds like a great gig, but he's getting 50 invoices a day. And when you look at the entropy and the friction of it, plus of course the liabilities and then the asymmetry, right? His tenants are allowed to not pay him, but he absolutely has to pay all of his invoices, and including has to pay Uncle Sam. And if he doesn't, then his real estate's not his real estate anymore. I mean, ultimately, we're renting everything from the government, even the property that we own and the dollars. Right? These are Federal Reserve notes. These are basically promises. And so, I got tired of trading promises. And I think MSTR and Bitcoin Treasury companies are going to benefit because more and more people are realizing that, 2008 and before that, 1997 and before that, 1971 and before that, 1913, these were, inflection points where basically the people who had access to the printers were like, okay, well, they're kind of buying this modern monetary thing. Like, let's just print more. And then they printed more in 1971. And they were like, you know what, let's just gold. No, let's just go completely virtual. Let's do pure credit money. Like, let's take this thing to the next level. And we've just printed our way out of everything. 2008 was not a liquidity crisis. It was a solvency crisis. Like, introducing more money into the system was not the solution to the problem, but it was the solution if you were an asset owner. And it was the solution if you had a vested interest in the system not fundamentally breaking down. So anyway, the medicine we took in '08 wasn't medicine, it was poison. And now it's made the situation much worse for fiat in 2025, but much better for Bitcoin, which is why I think we're seeing so much love going to all these treasury companies.
This episode is brought to you by Arch Lending, the premier provider of crypto-backed loans designed for both individual and institutional investors. At Arch, your digital assets work for you without selling them. Arch offers flexible loan options tailored to your needs. Backed by industry leaders like Morgan Creek Digital, Castle Island Ventures, and Galaxy Ventures, Arch Lending is setting a new standard in crypto-backed lending. Are you ready to unlock the potential of your crypto assets? Visit archlending.com to learn more and configure your loan today.
Europe's richest Bitcoin heritage site, Prague. BTC Prague, the biggest Bitcoin conference on the continent.
Join us June 19th through the 21st for Bitcoin Prague 2025. Use code KOTSMAN when you buy your ticket at btcprague.com. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. When you look at products like Strike and Strife, you have like 8% with upside or 10% forever. Is there some way to communicate that story so that the market understands it and faster? Or is it just the market on a curve will discover it and it's just kind of an adoption curve of those products kind of being appreciated in the market?
I think you're right. I think ultimately it's one of these investing is experiential, and you have to go through cycles and understand, okay, well, Bitcoin went up, 55%, but here's my 12% coupon. Like, do I feel good about the trade that I made? And conversely, protection from consistent income is something that a lot of Bitcoin holders have never actually been able to have, so it's nice to be able to convert some of that economic energy into that. I think that these products are certainly interesting in the sense that they open the universe and create more surface area for potential investors who want to come to Bitcoin, because they could say, like, I get the Bitcoin thesis, but I've always needed yield, and that's just really important to me, and I don't have a way to get exposure to both of those things. So I think these products are doing great there, but I can't emphasize getting exposure to the underlying as much as you can before getting into these other vehicles. Now, look, these other vehicles have, to my earlier point, have incredible surface area between TradFi and the Bitcoin. So, of course, there's a lot of volatility when you're sitting between those two pockets of energy. And so I still think MSTR is going to be generating a lot of returns for their investors just based on those dynamics. I mean, we've got 300 trillion of monetary premium that has to fit inside a currently $2 trillion box. You do the math.
Yeah. Was there a certain something or a moment that really solidified Bitcoin for you, where you were able to be confident to use it as that storage battery all those years ago? Was it like you looking at the code yourself, or a conversation, or a resource, or a person, or like what gave you that amount of confidence a dozen years ago to use Bitcoin as a storage device?
Well, as I teased, I was afraid of spreadsheet industries, as I called them. And you could argue Bitcoin's the ultimate version of that because it's just code, that's being run by a distributed computer. But I learned more about that distributed computer. I mean, even in 2012, it was an impressive computer. Now it's the biggest computer in the history of humanity. And it just gets bigger and bigger, more nodes are activated. And we also have a growing number of essentially, it's a kind of a cheeky term, but almost non-economic Bitcoin buyers. Like, MSTR, 21, all these folks, they have a thesis. They're taking capital, and they basically have to deploy it more or less into one underlying alone, Bitcoin. And so the more we see ETFs gobbling up multiples of the daily issuance from mining, and the more we see 21s and 21's cousins, and there's going to be more of these things coming. I mean, heck, Darkside and I from X and like 3 other guys are working on a fund right now where we're basically seeing all the fun everyone's having. And we're seeing also some arbitrage opportunities that are happening. Some of the parts of the Bitcoin market never close, futures and of course Bitcoin, but then other parts like MSTR and these other folks, they have regular market hours. So there's clearly opportunities where correlations break down, and there might be some interesting opportunities there to mine.
I was going to ask, based on your background, if you would ever consider in some way, shape, or form, taking a private company public as a Bitcoin Treasury company, or do you see yourself more on the arbitrage private fund side of things?
I think I like the freedom that comes with the private side of things. I mean, you still have to be registered, but you have a lot more discretion in what you're doing versus a publicly traded company. I think that I'll leave that to folks with higher communication skills than me and more comfort with the public markets and things of that nature. But I think that it's a totally valid business model. And I think that we're going to see a lot more Bitcoin SPACs and sort of amalgamations of capital that are Bitcoinizing existing companies, And there's all sorts of opportunities, whether you're taking Bitcoin and even like I've talked to some of the companies into taking Bitcoin at a small discount to their current price under the theory that it's not really a theory, that Bitcoin's going to appreciate to the point where a year or two from now, you didn't give away a discount. You actually collected a premium. You just have to have a lower time preference. And as a Bitcoin holder who rarely spends it, I know that you almost have to be incentivized to get rid of your Bitcoin. And look, a 10% discount when you think that the asset's going to go up 55% a year, if you're buying because of the discount, then hey, what can I say? You're obviously a value buyer, but you're valuing at a different time frame than I am. I'm valuing, 15, 20 years in the future, and you're trying to get the lowest possible price now. And Bitcoin is an interesting way to incentivize people to pull economic energy that's been stored in the sidelines. Because that's the other thing, right? Like, so much wealth has been created. And I think part of the reason why central banks and the powers that be are trying to essentially bring down interest rates is because they want to starve capital that's in the sidelines into play. They want to accelerate money and get it moving. And I think money's been hiding because, they don't know a good place to go. And I think Bitcoin, they've been bit by the real estate bug. They understand things that can happen in other asset classes. But now Bitcoin is starting to become more and more widespread. So I think that there's a world where a lot of the stealth wealth that, isn't on the Forbes list, but it very much exists, can finally find a compelling place to go and deploy their capital. Also, Bitcoin's one of those things where it could already be happening and we wouldn't really know.
There's been a narrative recently about, like, you may not care about or want Bitcoin, but the AI agents care about and want the Bitcoin.
Yes.
How would you kind of explain that or think through that, like the convergence of, you even add a couple other things in if you want, right?
Sure.
Bitcoin, AI, BI, something else.
Yeah. Well, true. An AI agent is essentially a virtual embodiment of AI, right? A robot is an automaton that goes out and influences the world. An agent is a virtual robot, right? It just goes out there and influences the digital world. These have brains behind them or else they wouldn't do very well. And so AI is the brain behind these AI agents. And so people are empowering AI agents to go out into the digital world and do things for them. Buy stuff, sell stuff, look for opportunities, rent me an apartment. I'm going to Spain next week. Can you find me the best Airbnb closest to public fountains with south-facing views, blah, blah, blah. Now, the AI is going to get, to a certain extent, empowered with some economic energy because it needs to go out there and buy stuff. You can't just say, okay, I found you something. If it's really useful, it buys for you. Mm-hmm. An AI agent who's truly intelligent is going to look at and understand, how do I deliver this payment in a relatively cheap way? Because I want to maintain and maximize the amount of energy that I'm delivering to the recipient that's not burnt down in transmission fees, but is actually the economic energy that I mean to send. Meaning, if I'm going to buy $600 plane ticket, I don't want to spend $35 on a wire fee. So I don't want to give my AI the ability to use my bank account because it might just accidentally send a wire for something. And that's quite silly to do. Bitcoin is a much cheaper way to transact and move economic energy from point A to point B. Also, if you are agent co and you are, capturing your users' economic energy, do you want to store it in fiat or something that's, going down 6-7% in purchasing power a year? Or do you want to store it in Bitcoin, something that's going up 55% a year? I mean, logistically speaking, it only makes sense that you'd want to get into the hardest money possible and then empower your agents to be running around the internet with real good money, not, feeble money that's losing value by the minute. So ultimately, I think that, Bitcoin's algorithmic nature makes it the perfect tool for agents to use when transacting on the open internet for us.
Are there any tools or resources or books or that you use that you've used over the past 30, 60, 90 days that you would recommend to other people?
Yeah, I think AI is the first tool that you could use to learn itself. Like the first thing I did when I got ChatGPT was say, hey, can you give me 5 hints for talking with you? And of course, they weren't so great because it was ChatGPT 3, but nowadays ChatGPT 4 and Gemini 2.5 Pro, and these models are very adept. So you can literally have a tutor in the AI system itself and have it bring you up the curve. And so that's my first tip. My second tip is you could use AI to make analogies. And analogies are amazing devices that we use to translate information from one mode to another and help us understand it better in the translation. And so oftentimes when I read machine learning papers that are above my head. And so what I'll do is I'll dump it into the AI and I'll say, please break this down, help me understand it. And please give me 3 analogies to explain what's the underlying breakthrough of this paper. And the 3 analogies bit's the key, right? Because if you're talking to a normal person, you'd say, hey, can you help me understand this? And you'd be lucky if they gave you 1. And then they kind of give you this look like, you got it? And then that was the end of it. AI will give you 3 analogies, it'll give you 5. And so it's nice because then you could read through, and then typically 1 might be confusing, but once you read 2 or 3 of them, you try to triangulate on a good understanding of the topic. So, number 1, use AI to learn about AI. And 2, remember you're not talking to a human, so you're allowed to ask for things that would be arduous to ask a human and that your social customs won't let you ask, but you're not talking to a human. So ask them to rewrite it 5 times. Like it's worth learning it. So
that's great.
Yeah.
I guess I'll just throw it over to you for closing thoughts. If you want to tell people where to find you or your firm, anything else online.
Yeah, absolutely. So I'm on x.com, McDonagh Matthew, McDonagh, Matthew, Matthew, and then lifeinthesingularity.com. That's a Substack where I talk about technology and the rising power. Essentially AI is going to get channeled into an embodied form, into robots. And you're going to have Optimus bots walking up and down the street. And Teslas already are driving the streets, and they're already mapping the world pretty much in real time. And soon there's going to be enough Teslas on the road that Elon's going to be able to see the flow of energy and mass. But there's a blank spot. Optimus bots are going to fill in the blank spot, what's happening inside buildings, inside homes, on streets. Then Elon also has X, which is essentially an overlay letting us know kind of what's humanity thinking about, what are they learning. Google's big advantage, I think, over the last 30 years has been every time humanity has been faced with a new idea, we've all run to Google and said, what's this? How do I use it? So Google's got to watch us learn how we're learning. Now search engines are unwinding and people are talking to AIs now, and they're going on social media and talking with each other. Of course, there's a lot of bots on AI, so it feels like I'm talking to bots when I talk on X2 now these days. But anyway, my point is that technology is giving us an increasing level of understanding of the world around us. And although it might be spooky for some people to think technology is going to take my job, I can promise you it's going to create 15 jobs for every 1 job that it destroys. And more importantly, we weren't put on this place to be cognitive workhorses, for corporations. We were put here to create, to solve problems for each other, to communicate, to share. And I think the AI is going to help lift us up, and robotics is going to help lift us up. So AI is in the digital space, agents are in the digital space. Going back to my earlier point, robotics are going to start helping, lever us up in the physical space. And then that's going to unleash what I think is going to be an era of incredible renaissance of creativity and flourishing. Novelty is the term that we use when we're talking about the singularity in AI, because you're going to get to a world where truly every single day, new experiences are going to emerge, and they're going to be so much more compelling than the experiences from yesterday that you're going to willingly give up your iPhone for the Zorg phone. And it's not because you don't like the Apple anymore. It's because the Zorg phone is just so much better. It's got quantum radio. You're able to, it's just infinitely better than the Zorg phone. The point is that technology is going to change so fast in the future that on a daily basis, we're going to be both amazed at what we're doing and constantly trying to use AI to help us sift through all the options available to us. And what's all this going to do economically? Well, what it should have been doing now, which is deflating the price of goods, right? Goods should be getting less expensive. Technology is making it cheaper to make things. Why aren't homes $25,000, new builds? Why aren't cars $1,500 new builds? We have the technology to do it. And Tesla's, by the way, over a long enough time frame, not to hype, I think they will be pushing the cost down. And we just saw a $20,000 electric truck get dropped on the US market. So we're seeing the promise of technology finally start pushing down. But unfortunately, if they keep printing money at a faster rate than we're innovating, then all that's going to happen is the price of goods go up. And so that's why I love Bitcoin, because the promise of technology is it's supposed to make our lives better and it's supposed to deflate the cost of things. Well, you know what? I think a home, last I looked, the median price for a home is like 4.5 Bitcoin, right? In 2016, it was like 1,600 Bitcoin. So prices are deflating in Bitcoin terms. So
this is awesome.
Yeah.
Matt McDonagh, thank you so much.
Jim, thanks, man.